All righty. Good morning, everyone. Welcome to the trade findings and adjustments for Thursday, August 10th. You will notice if you take a peek down here in the lower right-hand corner, it is 6:56. If I can get this in. You look right down here, it is 6:56 in the morning. And today I want to go through adjustments. A lot of people talk about, oh, I can adjust, I never lose money. It's interesting because placing the trades are the fun part of investing. In real life, the managing part takes being up at 6 o'clock in the morning, an hour and a half before the market opens. It takes looking at charts, and saying, okay, the S&P 500 is negative or bearish, I guess would be the better way to say it, right? The S&P 500 is bearish. So, Kevin, how bearish is it, right? Well, slightly bearish. Going to touch the 50-day. Have our technical crossovers. Technically, the S&P 500, if you were to look at it, it is a bearish trending index. So how many stocks are going to buck trend against your S&P 500? Today, we were up looking for what data was coming in regards to the CPI. So here we are looking at the inflation gauge rose 3.2% annually in July, but it's less than expected. Well, that's been happening for the last little while. The US took a 100-point jump on the Dow because the inflation rose less than expected. It's if you do the work that you're supposed to, it's much more difficult to invest than you think. It's not just placing a trade and making money. So I've been up for an hour. I usually get up an hour and a half before the market opens. And my decisions today are, what am I going to do about Disney? I'm looking at Disney in this account. It expired because I logged out, huh? All right, so let's log back in here. I'm trying to decide, what am I going to do with Disney? How am I going to make a decision on Disney? And the reality is, what can I do to pay off my put protection that I've put on in the first place? So that's what I'm trying to look at. I'm going to log back in so you can see that account. I'm doing this behind the scenes so you guys don't see login numbers and all that fun stuff. All right, here we go. So in this account, I'm sitting here, and the positions I have that we're discussing are Disney. I've got the August puts that are worth $243. They're already down $500. I have shares of stock that obviously are going to be up today. Looks like I've got 700 shares of stock. They're most likely opening up at that $89 range, which is $3 above the $86 puts. I really don't want to lose the money that I spent on these puts, right? A lot of times people say, I'm losing money on puts. Well, you're going to gain quite a bit more on the stock. Any way you look at it, you're going to gain significantly more on the stock. The stock's at 240. The puts, it looks like cost, well, it cost, I'm looking at it, it cost $22, $2,205. So let's see how much those cost. I don't have them on a per basis. 2205 divided by 700. Looks like they cost me $3.15. In fact, it's right here. Average price is $3.15. The stocks are going up 240 today. And looking at Disney, there's a good chance Disney's going to be moving significantly higher in the near future. To bring up a quick chart on Disney. And I'm going to bring Disney up in two different places. If we're to bring up a quick chart on Disney here. It's going to open up above the 50-day. And it looks like its first run up to anything that's going to hold it back is going to be to that $95.76 range. It's going to open up above at $89, which is above the $88.87 range, which is the 50-day simple moving average, the 200-day at $95.76. We're literally looking at, hey, we're going to have a run in Disney, most likely to where it's going to hit its first level of resistance, its first level where it's going to have a hard time getting above it or moving higher. It should go from where it currently is trading, where it closed at $87.49. It should head up to $95.76. It's an $8 move higher. Out of that $8 move higher, we have a cost built into our trade of $3.15 for protection. So, quick question is, how do we, can't type, how do we get back some or all of what we paid for protection? So we have $86 or 86 strike. 86 strike long puts that cost $3.15. Disney info, right? The 50-day simple moving average sits at $86. $88, I'm sorry. Let's take a quick peek one more time. $88.87. 87 cents. The 200-day simple moving average sits at $95.76. Our technicals, our technical charting, right, shows an $8 most likely move higher. So here it comes, right? What is our adjustment for the long puts? And that's the key, right? The key is, okay, we want to make up or find a way to pay for the $3.15. Or the neat thing is, how can we lessen that cost? It's interesting. In real life, we pay insurance on our home, our house, our health, our cars. We pay insurance for all kinds of things. And we never bat an eye when it comes to making the payment. Health insurance comes out of our checks each month. We pay money each month for our homeowners insurance, for our autos insurance. It's funny because people, when they trade, they're like, we're giving up all of our profits because of our insurance. That's not true. If you look at how important it's been on stocks on the way down, because stocks fall much faster on the way down than they go up, it's huge. This is how you dollar cost average without having to put more money in the account. The expectation is an $8 move higher, which means it'll pay for that insurance. Your home will appreciate more than the insurance you paid throughout the years. And that's what people sometimes miss. I don't want insurance. And then their stock falls 15% and they freak out. Just like your home, it appreciates more than the insurance you pay on it. It's the same thing with stocks. Your stock should appreciate more than the insurance you pay on it. The beauty is you have the opportunity to find a way to to maybe pay some of that off. And that is kind of one of the neat things that you have with options. You get the insurance to get you through an earnings event when a stock is most likely going to lose 15%, and you have the opportunity to adjust to pay off some of that 315. So, Kevin, what is our adjustment? What are we going to do? My thoughts just out of the gate, right? My thoughts are at the end of the day to allow Disney to prove their earnings. And when I say prove their earnings, I'm just seeing if the stock market buys what they're saying. They beat on the earnings per share. They missed on the revenue slightly. And this is a big push that they're going to charge more for Disney Plus. They were down originally because their subscribership lost more than expected because of India, and they lost the rights for the cricket showings, the Premier Cricket League over there in India. So right now, my thoughts for the day, how is Disney going to prove their earnings? That is our main question. They need to prove their earnings. So at the end of the day, I want to create a bull put strategy. And for those that don't know what a bull put is, you have the long put. For us, it's at $86, right? That was our protection, the right to sell our stock. And then we add a short put, and I'm probably going to do it at 88 or 89. I'm trying to do it below or at that 50-day simple moving average. Simple concept, right? For those of you who've traded, simple concept. It should be a support level. Old resistance levels become new support levels, but there should be some buying orders institutionally. Institutional traders look at the 50-day and the 200-day. They don't look at the 100 or the 90 or, all these weird crap that you see out there. 50-day and 200-day is where hundreds of millions of dollars trade through institutions. So it's kind of funny when you see some of these guys talk about a 90-day, a 100-day, a 8-week 100, an 8-week simple moving average. All that's crap. Just throw that out the window. Big money doesn't trade on that. They trade off of the 50 and the 200. That's where institutional money looks to make their decisions. If Disney can hold above the 50-day, I want to add a position, and we're adding that short put. For those that don't know, Kevin, what is a short put? A short put is the obligation to buy the stock at a certain price for a certain period of time. It is a credit. Someone is going to pay us money to buy Disney at $88 at whatever strike price, short strike price, which is $88 or $89, whichever one we choose. Now, the protection in this one, we have the right to sell it at 86. Our protection on our stock gave us the right to sell Disney at $86. So as I take a look, I'm trying to find out what price can I get. Boy, it really gets you logged out quickly here. I'm trying to find out what price, what dollar figure can I get to be able to log in. What dollar figure can I get to be able to pay for some or most of this position? So that's what I'm trying to decide. Hey, what can I find? What dollar figure can I get for my for selling a put to create an adjustment strategy to create a pull put? What dollar figure can I get that's going to give me a way to create money, to pay for that $3.15? So if I was looking to put an order in here, got 700 shares. I want to do a put. I want to sell. I want to do 7 contracts. And I need to do a price of $88. Ooh, we only have a 90 right now. And I'm probably going out to August 25th. Boy, it's not out very long. Should have went out a little bit farther. So Disney puts, I want to sell 7 puts out to August. I'm probably going to go out to $89 there. So this is pre-market. This is going to change a little bit. Right now, it is telling me that I can get between $3.90 and $4. Well, the stock's going to move up to 40. So the reality is that's going to change by probably $1.50 to $2. So in real life, I'm probably going to get somewhere around $2.40 to maybe $2 for it. But that'll pay off 2/3 of my insurance. That'll pay off 2/3 of the $3.15. So this is what I'm looking to add. I'm going to be looking to add at the end of the day the puts on the same expiration, August 25th. I would like to get a credit of $3.15 or more. I really want $3.15 or more that will pay for my long positions, my insurance I already have in place. I also, though, am looking for an opportunity to pay off just a portion of it. So if I can get $2 to $2.50, if I can pay off, $2 of $3.15, it means I only spent $1.15 for insurance or protection on Disney. That's a good deal for me. I'm looking at my chart to make a decision on, hey, will I be able to have that expire to collect that new credit so that I can pay for my on Disney? That is my thought process on a trade findings and adjustment. I'm going to adjust for Disney. You can see on the long-term trend line, we're going to get above it. I'm going to get above the 50-day simple moving average, and the expectation or the expected move is back up to this $95 point. So that I'm looking at to get it up to right here. Pretty simple understanding of what I'm doing. I'm just going to create a position that'll pay for some of that to get it off. Guys, that's it. That's what we're doing. That's what we're looking at today. Our adjustment is to create a bull put or find some credit to pay off the insurance that we just had as we ran through earnings on Disney. I hope this is helpful for you guys. I hope this helps you understand the thought process in adjusting or creating trades in the market. Yes, I was up an hour and a half before the market opened because we had to pay attention to the inflation data that came out today. We have more inflation data that comes out tomorrow that also should boost our markets a little bit higher. So in a market scheme of things, the S&P should turn positive again. That is going to help our Disney position get up to the next level of resistance, which is at $95.76. I'm going to create a strategy that's bullish, that's running the same direction as our stock and our market, that help pays for our insurance we spent to get through earnings on Disney yesterday. Guys, appreciate you being here. Look forward to talking to you next Monday. I hope this gives you some insight in how we're looking at adjusting and trading our positions. Have a wonderful Thursday. Enjoy your weekend. Unless you have Disney can't get back up to that $100 range or more. Talk to you later, everyone. Bye-bye.